Hello YouTube. So today I want to make a pretty late video on this about a company earning that I have an investment in recently. It's called Constellation Software. So I decided to only add about a 5% allocation onto this stock from my portfolio due to the recent stock sell-off with the AI disruption risk and all that. I find that when it comes to vertical market software, especially in these small niche monopolies, the switching costs might be extremely high for a lot of these small businesses and niche markets to make the switch. Another reason why I decided to purchase the stock is when the old founder left the company a bit. There was a lot of the new CEO, a lot of the insiders started buying its shares. And there are many reasons why an insider will sell stock, but there's only one reason why insiders tend to buy stock. And generally, when you have a lot of shareholder, insider kind of ownership in a company, that aligns with your investment. It's actually aligned. So that's a benefit of Constellation Software. But enough ramble, let's go on to the Q2 2026 earnings and what I think about it. And my investment thesis is never going to be, what happens, in a quarter, 2 quarter. It's easier to kind of invest in the 3 to 5 year kind of time frame. So I kind of want to, align. If you're the type of person who kind of invests more long term, then this is the video for you. So let's start with the headline numbers for Q2. So revenue came in about $3.3 billion USD, which is year over year 17% increase. We actually don't really care about GAAP net income when looking at Constellation, just because of the heavily distorted non-cash charges and foreign exchange. What we care about is actually the amount of cash that they can use to buy more businesses. And this is where I find actually a complete green flag when it comes to investing in this business. So software valuation has pulled back in basically 2026. So right now they deployed almost $900 million in buy businesses in Q2 alone. And immediately after the quarter ended, they committed another $800 million. Which is actually an insane capital deployment. However, I am kind of a bit concerned about the organic growth. So it did slow to about 3%, and if you adjust for foreign exchange, it's barely 1%. Constellation isn't known for its massive organic growth, but when that numbers start inching towards zero, it means the underlying businesses they own aren't growing naturally. They are solely relying on acquisitions to move the needle, which does have a bit of red flags in my opinion when it comes to this business. And unfortunately, this is a question that, a lot of these, the clouds are unclear kind of situation. So you, on one side, you get organic growth kind of softening, but on the other side, you have M&A absolutely firing in all cylinder. So that leaves us the question, is this a good stock to hold for the next 3 to 5 years? And I think it's still absolutely a yes. So Constellation Software is the ultimate compounding machine. The entire thesis of owning this stock relies on their simple mechanism of ability to kind of generate cash by their existing, 850 plus software companies, and kind of deploying it into new acquisitions at a high return on invested capital. As long as the hurdle rates still hold up and the capital continues to deploy efficiently, the math takes care of itself. In 3 to 5 years, the sheer volume of cash they deploy in Q2 2026 is going to bear fruit in my opinion. In my opinion, I have no intention of selling any of my shares at this price, $3,100. But I don't hold anything blindly. For me to hit sell and to walk away from my $2,400 cash basis, 3 things needs to happen. Number 1, the M&A engine stalls. If Constellation Software starts generating more cash than they can efficiently deploy, they will suffer from cash drag. If we see multiple quarters where they're only deploying $100 to $200 million while the cash piles up into the balance sheet, the compounded math actually breaks. Number 2, is the organic growth turns negative. A 3% organic growth to me is still acceptable, but negative organic growth means the underlying businesses are rotted. Another thing to look for is the cultural drift of the company. Mark Leonard built a highly decentralized structure specifically so it could kind of survive without him. But if he steps away completely and we see, like the operating groups consolidate, get bloated, or lower their hurdle rates to get deals done, then I'm out of the stock. But for now, their Q2 shows the machine is working exactly as designed. They are buying the dip in private software valuations aggressively. And if you want to see how this M&A strategy continues against softwares that are purely massive organic growth like ServiceNow, I want to make a video on that in the future. But as of now, we're just focusing on Constellation just because they just released their latest earning report.